Hey guys, welcome back to my YouTube channel. So I hope you all had a great investing week last week, and if you hadn't, hopefully the next week will be good. So today's video is going to be a bit linked on about what I think about Brexit, whether I think it's good, whether I think it's bad, what opportunities could it bring overall, and how you should just be playing the system rather than sitting on the sidelines and hating or getting annoyed by one thing happening that you don't like or something that happening that you do like. So as an overview of what Brexit poses, in my opinion, it's depending on what happens, i.e. a hard Brexit and no deal Brexit is good for the UK. Now why is that the case? Because the European Union at the moment currently just doesn't work. And by what do I mean by that? And what I mean by that is the fact that the ECB for the last God knows how long now have been just propping up the financial markets through measures like quantitative easing to try and stabilize the economy, to try and get the economy back on its track. And clearly it's not done a good job. And why has it not done a good job? You could see places like Italy that have gone into a recession. You have Greece that's obviously still in a complete doldrum of a place. And you have countries like the leading powerhouse, if you say barring UK, Germany, where they are also having problems with their manufacturing automobile sector. And that's pretty much what they have and the only thing they have. And someone once said to me this, which was very, very true, that the world was not going to start speaking German or French after Brexit. English is a business language. Now, the firms that are claiming that they'll leave the UK and go and set up base in Frankfurt or Paris, you have to read in between the lines. Some of them are just saying it as threats to the UK government so that to make sure that they negotiate exactly what is required. And some of them are moving places there, but they're moving the side that is not, say, client facing. The back office, maybe operational side or whatever have you. So you gotta sort of read in between the lines and understand the fact of what's really happening and what really drives the market, and who would be more prosperous from it. Now, if there's a no-deal Brexit, firstly, European Union don't even get the divorce bill, so that's another tick in the box for the UK and the plus. And they need that money, and they need that money to bail out companies like Deutsche Bank. You look at Deutsche Bank, and is a great example of showing you how bad the German economy is right now. And it's always good to look at banks in the respective country, because banks always give you the indication, because of the fact that they're cyclical companies, and they are representative usually of how the market is in that specific country. And you look what we have with Deutsche Bank, and whether they do a merger with Commerzbank or not, they'll probably need some sort of a rescue plan, some cash. And who's going to come in at that point? The ECB. And at the end, the UK taxpayer, if we do end up paying a divorce bill, technically the UK taxpayer will be paying for it. Now, if we leave the EU, then we have our own, back to what core Britain really is. We can create our own trade agreements, and people want to do it with us. It's not about, oh, as a European Union we're not stronger, and as a single country we're not, but UK is strong, and they are strong. You know, just look at Singapore. It's a lot smaller than the UK, yet they're now becoming one of the financial hubs in Asia, and we have attractive rates for businesses to stay in the UK. You know, we have a gateway open for them into the UK markets for starters. You know, the biggest clearinghouse, in the UK. So, you know, and again, like I said, the world is not going to just start speaking German or French just because of Brexit. So companies want to stay up here, and you also should look out for news such as this. London HQ, like people like Apple, at moments like this are wanting to set up in Apple in the UK, and there's a reason for that. Is because they know that at the moment they're getting cheap rates with the currency exposure. They're making 20-30% discounts, plus there's uncertainty, so it's put the cost down, and the government is obviously going to do what it can to get big companies in and get offer them better taxation rates, and that's good. And if companies like Apple are thinking of creating their tech hubs here, fine. Even if the financial industry does have some major downturn, the tech hubs will then thrive, and the tech hubs are coming here. We've got Facebook also planning to come here. So you have to look out for information like this. Now, big companies are not going to spend big money after Brexit, which is seemingly meant to be the most damaging thing to the UK economy, when they know all this information, but they're still coming here. So that should be clearly a sign for people that, and these obviously these big companies, they do their research. They have people like me, like you, like probably 4 or 5 times smarter, and like tons of them to give them that guidance. So these are things to look out for and to understand that Brexit is not necessarily bad for the UK, provided we do actually have a hard Brexit and we actually get out of the European Union, because we can thrive more and better on our own. So yeah, that's a little bit of a strong statement, but I completely stand by it. Let me know what you guys think and leave comments below, and I look forward to seeing you guys in the next video. Bye.